This is Alan Bush with the Daily Financial Forecast for Thursday, September 5th. Stock index futures are mixed this morning and are not responding to the bullish interest rate implications of this morning's mostly weaker than expected employment reports. Employers in the U.S. announced almost 76,000 job cuts in August, which is the most in 5 months, and that is up 193% from the job reductions announced in July. Also, we had the August ADP employment report showing an increase of only 99,000 when up 140,000 were expected, but jobless claims coming in slightly less than anticipated. So September has really not been the best month historically for stock index futures, although I do think that we will probably see some recovery gains later this month. And I do not think we are in the beginning of any type of long-term bear market for stock index futures. In the currency markets, the dollar index declining yesterday after U.S. July trade figures coming in on the weaker side, showing a wider deficit. Also, we had the mostly weaker employment reports this morning as an additional negative, putting pressure on the dollar index. Still looks like the European Central Bank is on a course to lower interest rates, most likely at its September 12th meeting and probably again in December. And in the interest rate futures markets, we are seeing prices higher across the board as it appears more likely now that the Federal Reserve will be lowering its key interest rate, the Fed funds rate, at the September 18th meeting. Right now, there is a 55% chance that the Fed will be cutting by 25 basis points, but there is a 45% probability that the Fed could cut by 50 basis points, and that 50 basis point probability has been increasing in the last week or so. So the best markets to be long currently are the interest rate market futures, which will be most likely supported by an accommodative Fed, and also the gold market, which also will be supported by lower interest rates, not just here, but globally. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.